So I wanted to make some content around what lenders are doing that I've noticed that disqualify great borrowers from loan products. So uh, this video is about what depositories who are giving out multiple loan products are doing wrong and disqualifying qualified borrowers that I've noticed. And they have credit policies that are disqualifying people with student loan debt, more educated borrowers. And it's because there's a misunderstanding around what a loan in forbearance versus in default versus in repayment, how all of that may impact a person's ability to purchase whatever it is they're trying to buy, whether it's a car, a home, a boat, whatever, like whatever the product is, whatever loan, personal loan, it doesn't matter. Obviously, house has collateral, and there are guidelines by the GSEs, and there are more guidelines around that. But I'm talking straight up other other non-mortgage products that are more discretionary and based on the depository's credit policy. Okay, I want to discuss that because what I notice is depositories straight up will tell me we just use 1% of the balance. If they have some documentation that shows their payment is something else, great. But most of the time, we don't even ask for it. We just take 1% of the balance and we use it to calculate the debt to income. And if their credit score qualifies, we use the 1%. It qualifies, we will give them an offer for that loan product. It's a super instantaneous decision. We don't even think about it. And I'm saying, okay, that's great that your process is instantaneous. It's like an Amazon-like experience. They have all this tech. Oh my God, amazing, right? But what you're doing by creating that instantaneous decision is you are disqualifying about 20% of people who would otherwise qualify if you just slowed down for one tiny minutia of a second and thought about what is their payment? Do they have a payment? What is the status of their student loan really? And providing some context around that so that, especially if depositories, credit unions, banks are indirect lenders for auto, it's really important that you do this because you could literally be winning out. The auto ship dealer, the auto dealer might be sending out bids to like 4 different lenders, right? Let's say 3 of them just do the same thing. They use 1%, they don't look at it. I mean, more people are coming out today with more student loan debt than they are earning out of school, regardless of the degree, okay? Literally more than 50% of Americans who go to school, especially if they have any type of graduate continuing, or they're a non-traditional student who are taking multiple semesters over different lengths of time to get a degree, then they're going to have more debt, and more debt than they're likely to earn when they usually come out of school, right? And that's when people need to take auto loans, is when they don't have enough cash to pay cash, right? So that is a very interesting, that's a very pivotal, important time in people's lives to actually take their auto loan and start building their credit. So I wanted to mention a very important stat, besides the fact that 50% are coming out with more debt than income, but those going for loan products like auto loans and personal loans, 62 to 78% based on the depositories we work with in the consumer loan pipeline have student loan debt. So if you're just using a willy-nilly 1% without understanding their student loans, you are literally disqualifying 20 to possibly 30. If you have lower percentage of student loan borrowers, maybe it's 15. But the point is you're still declining people that you don't need to decline if you slow down. And you don't have to slow down that much because LoanSense has an API product where we can give you an instantaneous estimate of what their payment would actually be if we slow down. So instead of declining people or telling them they really can't afford it because they have a debt to income issue or whatever the adverse action reasoning may be, if you ran our API, got an estimate on the reduction, instead of an adverse action, which by law you may have to provide, you can say, hey, complete the process to get the documentations we need for the underwriting process. Click this link here, get started. And LoanSense will get all the documents required for your underwriting process to use an actual payment or use documentation so that you do not have to use 1%, And now that client can turn around after being denied by 3 other indirect lenders from their dealership. They can turn around and say, okay, now I can get a loan. Okay. I think that's really, really important to speak about because, again, for a lot of depositories, personal and auto loans is a huge source of revenue from their client base and their membership base. And why deny that if it's a much quicker loan, much easier to underwrite than, let's say, a mortgage would be, and you have a lot of student loan borrowers coming in to those pipelines? Why not build a holistic relationship that focuses on where they're at? If they're in debt right now, what can we do to help them manage it? What can we do to help them qualify at higher rates than any other credit union and hold ourselves above higher approval rates, especially for people in their 20s, early 30s, and be known for an excellent customer experience with that younger audience. And then you can offer them financial planning tools, retirement planning services, insurance products, all kinds of products down the line by solving their single most largest pain point today. And it doesn't have to be hard. I know that if you go above and beyond to provide this information and they've been declined by 3 other people, and you offer them the right products and services that meet their needs, that they might just also become a depository customer, right? And they might also, by the way, when your member or client comes to LoanSense, we track their goals. We share it back with the depository so that you can get the information that you need on where that borrower is at, what are their goals, what do they want to achieve, do they want to buy a car, do they want to buy a house down the line, or are they about to start a family? We can share back that goal information so that your bankers or member service representatives or branch service representatives can be of utmost service to that client at the time they need it for the products and services that they need. So I hope that was helpful. Of course, we can give a full demonstration of all of this. We're available. I will link our sales leads calendars in this video and in this description. Have a great day.